What's the best way to pay yourself as a UK limited company director? That's what we're going to be talking about in today's video. Now, you've probably started generating some profit from your company, and at this point, you're thinking, I really need to take some money out of my company for personal use. However, you might want to start thinking about what exactly is the most tax efficient way for you to do this. So today we're going to be examining some of the most common routes that most people will typically use to take money out of their UK limited company. So if this is your first time here, my name is Tess and I'm a UK qualified accountant. And on this channel, I share weekly videos to help fellow entrepreneurs like you grow and thrive in their businesses. If you ever want to work with me on a one-to-one basis, you can do so using the links in the description box below. So let's start with salaries then. Salaries are by far one of the most common ways that many UK company directors will often choose to pay themselves out of their limited company. Now, the way this will work is that you basically ensure that your company has already been set up on a payroll scheme of some sort. Usually this is going to be done through the PAYE way. Okay, so ensure that you have spoken to an accountant who is able to advise you on properly setting up your company's PAYE. Now, you want to make sure that when you are looking to pay yourself a salary, you want to make sure that ideally you are paying yourself a salary that is within the personal allowance threshold for that particular year. Now, currently in the year that we are currently in, the tax year that we're currently in, the maximum personal allowance that will allow you to take out a salary without paying any tax on it is £12,570, okay, for the year. This basically means that if you were to take money out of your UK limited company and you wanted to do so in the most tax efficient way, you would need to make sure that you are not paying yourself a salary of any greater than £12,570 for the year. Now, this is assuming that you don't have any other sources of income, of course, okay? Because if you do have any other sources of income, the moment you exceed that allowance threshold of £12,570 for this tax year, then obviously you are going to start paying some tax. Another thing to know about paying yourself through this route is that you will also not have to pay any national insurance contributions, provided, of course, that your salary, i.e. the amount that you're extracting from your company to pay yourself through, does not exceed this personal allowance threshold of £12,570, and that you have no other sources of income that is going to be added on top of this amount, okay? Although this seems like a relatively small amount to pay yourself, it is worthwhile noting that salaries are obviously a tax-deductible business expense. So overall, this will actually enable you to be able to reduce the amount of tax that is payable on your corporation tax. So it is definitely worth bearing in mind if you were thinking about extracting money to pay yourself as a UK limited company director. Now, next up is dividends. Now, if a company has made profits after paying its corporation tax, then you can essentially make dividend payments to the shareholders of that company. And one of those shareholders would, of course, be you, who is the company's director. So this is going to be another way that you can choose to utilize in order to pay yourself some money out of your UK limited company. It's important to understand that depending on the amount of dividends you pay yourself will determine whether or not you actually pay any tax on what you pay yourself as dividends. So if you were to pay yourself a dividend income that is up to the dividend allowance for the particular tax year, then you would not be paying any tax on those dividends that you're taking out of the UK limited company. So as an example, for this particular tax year, which is 2024-2025, as at the time of recording this video, the dividend allowance is £500, £500 for the year, okay? So that means that if you were going to take money out of your UK limited company, you would need to ensure that you are not taking anything greater than £500 for the year as dividend payments to yourself. Now, so far, I've discussed two methods that you can use to take out money out of your UK limited company, and that is salary and dividends. Okay. Now, this particular third option involves you taking a combination of those two. So taking out salary and also taking out dividends. Okay. So that would be a third option that you could potentially utilize in order to pay yourself. Now, this option basically means that you are going to be combining the benefits of taking a tax efficient amount of salary and also a tax efficient amount of your dividends and combining that together. And that will give you a total amount of approximately £13,070 for the current tax year that we're in. This is basically a combination of the tax-free personal allowance of your salary and also the tax-free allowance from your dividends. The fourth option is going to be pension contributions. Now, pension contributions are definitely a very, very good way to pay yourself as a UK company director. This is because pension contributions are not only tax efficient when done correctly, but they are also a tax allowable expense, okay, particularly for those running a business. So this means that that particular contribution that you're making could be used as a way to actually reduce the amount of tax that you are paying when it comes to filling out your corporation tax return. Now, making pension contributions through your UK limited company is by far one of the most tax efficient ways that you can utilize in order to extract money out of your UK company. It's important to do your research around the pension schemes that are available that your company can be enrolled to, and through that make the relevant pension contribution. Now, we've spoken about 4 different ways of actually extracting money to pay yourself as a UK company director, but for the vast majority of people, the optimal way is going to be them actually taking a combination of low salary and combining this with dividends. Now, whilst this might be true for the vast majority of people, it may not be true for you. This is because each person's personal circumstance differs significantly. For instance, you might be sat here watching this video and you think, do you know what? I want to go with the route of taking out salary and also taking out dividends. But you have to consider the fact that you may have other income sources from other pots that you have not considered when you are utilizing this particular method. So I would always advise that you speak to an accountant to advise you on what is going to be the best strategy for you personally to extract money out of your UK company to ensure that you are staying as tax efficient as possible.